You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning into Mining Stock Education. I'm your host, Bill Powers, and a number of you have been emailing me over the last few months about what it takes to become a full-time investor, the thought process, considering the risks and the reward. What is it like, a day in the life as a full-time investor? And so as I was getting those emails, I was considering that myself, and I reached out to Brian Leni of JuniorStockReview.com, Alan Rizer, who is a full-time trader currently living in Puerto Rico, and also Michael Queller that Alan put me in contact with, another full-time trader since 2018. And I just brought these gentlemen on the show. We're going to have a little bit of a roundtable discussion to talk about their process of becoming a full-time investor. So gentlemen, welcome to the show. And Michael, I'd like to start with you. Give us a little bit about your background. You've been a trader since 2004. Share with listeners what that was like leading into your decision to go full-time on your own.
Well, in 2004, I was unemployed and I had a friend who was trading in a New York office and I was living in Florida. And he said, my firm has my office in Miami and you'd be great at this because you're great with numbers. You love to gamble. And that's what trading is. So I said, well, I'm unemployed. I have nothing else going on. Let's give it a shot. I went into interview and I saw the other guys there just in, polo shirts, driving nice cars, making money on a computer. And I right away knew, I said, this is what I want to do. This is for me. And I also could tell, I was like, there's no reason that if these guys can make money that I can't make money. They're not MIT scientists or anything. They're just regular guys. And so I sat down and started trading right away.
And that trading desk, it had some risk to it, right? You wouldn't get paid unless you were successful, but there was also some downside risk for you in that position, wasn't there?
Correct. Basically, you only got paid if you made money. Otherwise, you were living on a pittance of $300 a week, which was a draw that they always kept track of, and you had to make enough money to cover that. And so you were not there to make $300. You were there to make money, and that's when you got paid.
And if you lost money, what would that look like? You $500,000 loss on a trade. What would that look like for you?
That you wouldn't get paid again until you made back $500,000 and won. So it was always known that if you lost that kind of money, you were out of a job because you'd quit or get fired.
And your protege is on the call too, Alan Rizer. Tell us how you came into this trading. You worked with Michael there, didn't you?
Yeah, I started out in the same shop, and Michael Queller he was my trainer there. So he was like he was the first face I saw there, the guy on day one, I think you'd been there already 5 years when I started?
Yes.
Something like that. Yeah. But yeah, I started in the same exact situation. I was a young guy out of college and, I met these guys at this office and it was the same thing. I had a very similar experience, see a bunch of guys wearing polo shirts, driving nice cars. And I'm thinking, hey, these guys aren't rocket scientists either. I think I can do this, and it was really appealing, the idea of, you keep what you earn. But like you said, there's downside to it too. There was some, especially in the beginning, there's a lot of time you're really not making any money. And that's okay when you're young, when you're 22, no family or anything like that. But, I was eating ramen noodles a little bit.
Mm-hmm. Brian, what about you? What led you up to the process of becoming a full-time investor?
I think it was the confluence of a number of things. I had reached a good position in the steel manufacturing industry and came to the realization that I really didn't like what I was doing on a day-to-day basis. And it met with me doing really well in the market in 2016. And even though I had a young family, I wanted out of the 9-to-5 life that I was living. And I thought to myself, I've done well in the market, somewhat of a proof that maybe I can do this. And I took a leap of faith and I left. Looking back on it now, there's a lot of luck involved in that. And I'll just leave it at that.
So Michael, what thought process, walk us through your thought process of launching out on your own? Because what you described to me, it was almost like you were self-employed in some ways, because if you lost, you could lose big. If you won, you could win big, although you would share half your profits with your employer. So what was the thought process like leading into your decision to go full-time self-employed in 2018?
So I was never really concerned with my ability to make money because I had at that point been trading successfully for 14 years and had, I think, maybe one negative month in the last 10 years from, one trade that went bad. So I wasn't concerned with the ability to make money, so to say. And I had enough money saved up that I knew I, would be able to support myself. My only real concern at the time was that I was going to be changing platforms because the firm I used had proprietary software. So I was leaving basically all the software I knew to go with the unknown. And so I was just really nervous, like, would the software be sufficient so that I could continue making the level of income I'm used to? Because if not, switching to make 100% of what you make wouldn't benefit me at all if I was making less. So that was really the only concern. But, they did give me the software to look at, and, I was able to spend some time with it. And I felt pretty confident that I could make a comparable income. And I'm happy to say that I was able to. And so now I'm just not sharing anything. And, from the risk standpoint, now that I do take, 100% of the risk of my own money and, at any moment can lose, $500,000 of my own money, I treat it with a little bit of respect. If I'm in a position that it, looks a little dicey, I won't necessarily add to it. I may, cut the position. Even if I think it's a bad sale, I may still take the sale. Because one thing a good trader will tell you, we're risk managers before anything else. It's the most important thing because there's always another trade. You can always make more money. But if you blow all your money on one trade, the game's over. So it's just about managing your risk so that there's another day to trade. That's the number one thing. And I've always been good at that. And so I knew I'd be able to continue that. So I was pretty confident that once I believed the software was good enough that I had no doubt that I was making the right decision.
When you say software, is this like an algorithm or would it be described as an algorithm or?
No, I would like the platform. Like, for example, people that use TD Ameritrade are probably familiar with their platform called Thinkorswim. So just the trading software like that allows you to enter orders. Because while people trade different ways, a lot of what I trade is based on, being very fast and executions and, situations that are moving very rapidly. And so you need software that can, support that, where you can see news in real time, charts in real time, the level 2 quotes in real time, everything being, very fast to keep up with it. Most people that are, don't see level 2 quotes don't realize just how fast the market is moving when you're trading something like Amazon with news.
Yeah, that's a great point. And your family situation, what was it like at the time? You were very confident, as you just shared, but were you the sole breadwinner also when you made the choice?
Yes, I was the sole breadwinner and I have 2 children. So, life is not inexpensive. But I had, a long track record of making money. So I felt comfortable. And I have an ample savings at this point from 14 years of working so that I knew that, if I have a month where I don't make money, I can still put food on the table. The other thing, people need to understand is that if you feel comfortable having a job where you make exactly $500 a day, there's nothing wrong with that. But that's not what this is. The people that are drawn into investing is because they're hungry and they want the possibility to make 5,000 or 10,000 in a day. And they're also okay with the idea that they can lose 5,000 or 10,000 in a day. So, and that's me, I'm a born gambler.
So Alan, do you have the same psychological makeup as Michael? And how did you become a full-time investor?
Well, I think I too am a born gambler. I don't think I'm as much of a gambler as him necessarily. But yeah, I mean, what he said is absolutely valid. Like, you have to be willing to take the good with the bad. And I mean, that goes whether you're a long-term investing kind of guy or a short-term trader or a mix of both, like I am. With experience, you get very comfortable with, big red numbers and big green numbers sometimes, and that's just part of the game. But as far as, my start, I mean, it was kind of like I said, it was sort of first job out of college and I was hungry and, I wasn't sure it was going to work out, the way it did, but I'm here 15 years later. So
and what year did you go full-time on your own to where you got to provide for yourself without the firm you worked for?
Right. So I was with the firm for about 10 years. So that was around 2018 that I went full-time.
So you guys left at the same time. Who left first?
I did.
Oh, okay.
I was the bold one.
All right.
But yeah, going out on your own, it's different. You don't have that support, and it's the same thing. Like, I knew that, one really bad trade where that risk management goes off the rails, and I don't know, you're going to be applying for a job at Wendy's or something next week.
So Alan, did you have that pressure? Are you the only breadwinner? Like, what's the family situation? What was your responsibility there?
Yeah, I'm the sole breadwinner. No kids yet. So that does make it a little bit easier, I guess. I mean, I'm not saying I would recommend, not following through just because you have a family or something like that. But it's definitely important to consider, though, like your monthly expenses and what you need to come up with, not just for practical reasons, but psychological ones. Like sometimes when you're trading and maybe things aren't going well, and you've got those bills stacking up, and if it affects your judgment, it's a problem. So I think whatever your family situation is or your lifestyle situation, it's always important to make sure that you kind of keep that in check and have a buffer, because you really don't want, outside forces affecting your decision making in the middle of things.
FPX Nickel is developing the large-scale Dakar Nickel District in central British Columbia. Within the district is FPX Nickel's PEA stage Baptiste nickel deposit, which is projected to be among the world's top 10 largest nickel mines by annual output. The Baptiste deposit has the potential for the lowest quartile operating costs at just $2.74 per pound. And compared to recent global nickel mines, the project requires a low capex. FPX is also commencing its first ever drill program at its Van target in the Dakar Nickel District. Surface samples have indicated that the Van target footprint is larger in scale and 10 to 15% higher in grade than Baptiste. FPX Nickel trades in Canada as FPX and on the OTC under FPOCF. To learn more, go to fpxnickel.com. That's fpxnickel.com. Brian, what about support network? Do you think support network is important when you're making that decision? It's just you and the computer, your bank account, and your kids and your wife that are relying on you to make that all work. Like, what do you think about support network?
It's integral to be making a decision like that. Your wife and I guess your kids to a certain extent have to be, with you when you make a decision of that magnitude. And they also need to understand that it could fail. Outside your family. It's something I was thinking about when you brought up this topic for our discussion. I look at where I am now compared to where I was then. And I know without my support network, and this is mentors that I've kind of acquired along the way the last 5 years, I don't know where I would be without their help, to be quite honest. I think, when I talked about, when I did well in the market in 2016, I took that as proof as I could do this. But then I look at what I knew then and what I know now, I would say that I probably mistook a bull market for brains, as Rick Rule puts it. And that's sort of tough. So yeah, I think, for a lot of people that may be considering something like this, I think looking at where you are in the market and then understanding where your success may have come from would be a good realization of whether you can do this, because you need to be able to do it no matter where the market is. And I look over the span of how long I've been doing this. I've been in a bear market or uncertain market more years than I've been in a bull cycle. And a bear is completely different than a bull from what I have experienced. And you need to be able to, and as Alan and Michael have said, you need to be able to run with wherever the market's kind of going and not let it interrupt your psychology. And that's probably easier said than done.
Michael, what's the thing you regret most or dislike most about what you do now versus working for the firm, if anything?
There's really nothing I dislike. The biggest thing is I heard the firm buys everyone free lunch every day now. That sounds pretty good.
What do you do? Okay, you're looking at a screen all day. Brian's not a trader. I'm not a trader. Alan, you're a hybrid. You're an investor / trader, right?
Both.
Both.
Yeah.
Michael, you're a trader.
I'm bridging the gap here.
Do you ever find that you just got to get away from the screen, go fishing, go hang out with the kids at the park all day or whatever, just the stress of being a trader, especially if you've had multiple bad days in a row?
Yes, I think a work-life balance is very important in any job, but especially in our job, because there's so much anxiety and frustration in every trade, because you've never bought the bottom, you've never sold the top. So you've always left money on the table. I like to tell people I have two kinds of days where I lost money or days where I didn't make as much as I feel I should have. So every day is a bad day in that regard. There's never a day where you walk away and you're like, wow, I traded perfectly. It's just, it hasn't happened. I've been doing this for, 17 years now. So it's important to have a work-life balance, but I actually find it easy to break away from the market because on 99% of days in the middle of the day, the market does kind of get stagnant. So it's very easy to leave, at the bare minimum, take an hour, go to lunch. I like to go out to lunch a lot. So it's easy to take an hour. Anytime my kids have anything, whether it's a meet the teacher day or, they have some special thing that I'm supposed to be there, I never miss any of it. I go to all of them. There's hardly ever an instance where, I feel like I can't get away from the market. And then, occasionally there's something crazy happens, there's a flash crash and I sit there and work all day. But it's so few and far between that it's very easy to get away and enjoy yourself. If you want to play golf with me tomorrow, I'll play golf.
The day trader YouTube videos that are recruiting day traders where it's got the guy with the Lamborghini, the laptop beside the pool. Is that what your life looks like, or what is your life?
No, I mean, when I work, I'm laser focused. I'm in my office, with the door shut and I'm just trading. If I was at the pool distracted, I would not be effective as the way I am. But I'm at the same time, like when I take off, I also take off 100%. Like if my wife says next week she wants to go to the Bahamas, I go to the Bahamas. I don't bring any of my trading stuff. I completely disconnect from the market and I'm on full vacation.
Brian, as you're listening to a trader describe his day, what does your day look like as a full-time mining stock investor?
Some of those things are kind of common, when a golf game or there's something that comes up with the kids, I take the day and enjoy it. Other than that, I'm pretty engrossed in it. And that's probably another thing. If you think that you're going to leave your job, and this is my perspective. If you think you're going to leave your 9 to 5 and work less by going out on your own, I think you're lying to yourself because I work more than I've ever worked in my life. I wake up in the morning. I'm usually the first up and I have my coffee and I go through the news and then I go up to my office and I start my day. And usually my day is done when the market closes. And then I cook dinner with the kids and then I go back to work right after dinner, bedtime every other night with the kids. So that's kind of my day. And I work until maybe 9:30. And then my wife and I usually watch like a show or something. So it's a long day, but I have to say like I think it's great. And it fits our lifestyle and what I wanted out of, leaving my 9 to 5 job.
And I can verify that you cook dinner because I've called you and you said, Bill, I'm cooking dinner right now.
Hey, you know what? It's funny. I started in university doing that. I find cooking is one of those things that I'm not particularly good at, but I can forget everything else that's going on and just focus on cutting vegetables or such. So for me, it's a nice, no matter what happened during the day, I can kind of de-stress and listen to the radio. And that's kind of how I do it.
And Alan, you don't have kids. So what does a day in the life look like for you?
I mean, it's probably similar with or without the kids, at least for me. I mean, I'm first up in the morning, like Brian. I'm usually up at around 6:30. I take a little time off in the middle of the day too, at least lunch or some fresh air, get out, some sun. But then I'm usually working till about 8 p.m. Pretty, from the afternoon on, pretty focused. And then dinner with the wife and, same thing, watch a show or something like that. And then, you got to get your sleep because tomorrow's another day, every day is a new battle. So, yeah, I mean, I think for anybody who's full-time in this industry, whether you're a trader, investor, whatever, it does take over a good chunk of your day. It's not like sitting by the pool with your Lamborghini or whatever you're seeing on Instagram. Those guys are all probably just scammers. If we're being honest.
I've heard a lot of them actually just rent the Lamborghinis for the video too. So
at least they didn't steal it,
Right. So Michael, what do you do to quell any anxiety you might have? Do you close out every trade every day or do you swing trade? How do you use margin? Things like that.
Before I answer, I just want to elaborate on something Brian said about the timing of the day. When you have a job like this, it's always on your mind because your value of your net worth is always changing. So if I have a big position that's bothering me on my mind, and even though even after hours trading ends at 8 p.m., I will still sit at my desk and go on all the social media sites to read about what's going on, see if I can find anything. I will read about the company, anything I can find to put my mind at ease. And then it'll still be on my mind all night that I'll be up so early, sometimes as early as 4 a.m., just to log in as soon as it starts trading, just to see if there's anything going on. So that's the kind of environment you're getting into as a full-time trader. Now, to answer your next question, I have a really good way that I handle the stress. I always ask myself after, a losing trade or I'm in the middle of one, and I say, is this going to change your life? And the answer is always no. Even if I lose an amount of money that to some people would just be like devastating, let's say $50,000. The reality is, as much as it stings, it's not going to change my life. And I can just move on with that and say, this is just a bump in the road and my kids are healthy. My wife is healthy. I can still have money in savings to pay the mortgage. And that's what's important. So my life's not changing. So I can move on from this. But the big key there is that it's very important if you're going to be a full-time investor to have ample savings, because if your whole savings was $50,000 and then you just lost $50,000, you won't be able to feel that way anymore because you no longer have any nest eggs. So if you're serious about being a full-time investor, you better have an ample amount of savings to take on the risk that you're talking about. And if you told me, well, I only have $20,000 to my name and I really want to be a full-time investor, my short answer would be, you don't have enough to do this job. But if you were determined and you were going to do it anyway, I would say then you can't risk more than $1,000 on any one trade, because you can't, then that's 5% of your net worth. Fine, so be it. But you can't be risking $10,000 on a trade when you're worth $20,000.
So do you and your wife come to agreement on what number you have to keep in savings that you can't touch for trading purposes?
No, it's really just up to me. And, it's at my discretion. But I have an ample savings that I never really worry about it. But in my head, when I'm trading, I really don't like to take more than $10,000 of risk on a trade. And what that means for me is that once I'm down $10,000 in the trade, even if I think it's a terrible place to sell and I know I'm going to regret it and, I'm going to slap myself in the morning, I will still either sell it all or sell most of it so that I prevent turning a $10,000 loser into a $20,000 or $30,000 loser. But the catch in the markets for anyone that's traded is that there's so many unforeseen circumstances where numerous times I've made a trade where I think I'm only risking $500 and I'm dead wrong and I lose $30,000. And that's the unfortunate thing. And then, being a risk manager comes into play even more. And you need to say, I'm way over my downside. I've lost $30,000. And it's even more important to just say, I'm getting out, because I can't let a $30,000 loser turn into a $60,000 or a $90,000 loser. It's all about just being able to play the game the next day.
Brian, risk management. When I hear that, I think of you. What are your thoughts there?
Yeah, no, that's, I'm always trying to protect my downside risk. And for me, being a value investor, that's paramount. Every trade that I make outside of exploration companies is based on evaluation of the company and how much downside risk I have. For instance, if they have an economic study on the company, it's how much I discount that by and compare it to what the company's trading at. And therefore, to me, there's a degree of safety when you take that position. In saying that though, and actually I just had a loss yesterday and it's something that I thought I had my downside risk protected, and a couple of the risks that I knew that were in the investment coincided, and I lost a little bit more money than I thought. And that happens. But I can tell you from the process that I've developed over the last few years, I lose much less than I had in the past, and I'm many more winners. And I think ultimately that's what you need to do is, buy things that are worth more than they're trading at, and have an action plan to move things forward and have that valuation recognized by the market. And that's absolutely the way that you are, in my view, successful over the long haul.
Alan, since you're in Puerto Rico, you don't have to deal with taxes. So do you ever find yourself with not having to deal with that burden as an American citizen in Puerto Rico? This is all legal for those that know you can do this. Do you find yourself maybe being a little looser because you can say, hey, I can lose a little here because I'm not going to be paying 37% tax anyway this year?
I wouldn't say it makes me looser because, you can adjust your trade size based on what you expect the tax consequences to be. What I do think, though, is it does make me more flexible. Like I might have a position that I'm in and, anybody who invests has been in the situation where, you've been holding this stock for 10, 11 months and you see a great sale opportunity, you want to get out. Even if you think, it's only short term, I'll sell it, I'll get back in. But then you're looking at your tax consequences. You're going to think, man, if I hold this thing for a few more weeks, I'm going to pay significantly less taxes. And so you might miss out on that opportunity to sell it and buy it back or something like that. So I think it offers me more flexibility. But as far as does it change how loose or tight I am? Not really. It does, however, mean that when the numbers get big on both, if a big loss, you feel the sting a little more. There's always that joke, well, I can write this off my taxes, whatever. And then I come to the realization I can't, but it's a double-edged sword, I guess.
Let's go around the horn for final thoughts. Okay. Final thoughts, Alan, for investors listening to us, what would you like to share for those considering becoming a full-time investor? In an odd way, I'm sort of in that position because I've been trading for a long time, but I've really only been investing for a few years. And, that's where I found your channel and, went down this rabbit hole. And, everyone here is given really good advice, but I think something I would say that hasn't come up is I think it's really important when you're getting started in this to seek out professional guidance. I get great information from your channel and guys like Brian and newsletter writers. I'm a client of John Fenix, who I found from your site. And I don't think I could do this without that kind of information, like having somebody who has decades of experience and for a relatively small price, essentially can guide you in a way that you might not be able to do on your own. And that's really priceless. So I think really professional help really has a lot of value. Excellent.
In this game. And you put in a little and you get a lot out of that.
Brian, final thoughts?
I think a couple things. First thing is I think the 10,000 hour rule is very true. I think until you spend about 10,000 hours into something, you're definitely not maybe a professional or have the knowledge base to, I think, really succeed. Secondly, I think that people should know themselves and make sure that if you are thinking you want to be a trader or an investor full time, to be sure that that's exactly what you do want. And it isn't you just want to change from the job that you're currently in. I think there's a certain personality type that fits the investor or trader, and it definitely isn't everybody. So be true to yourself and make sure you understand and are looking for the right thing.
Michael, final thoughts?
Have some reasonable expectations, because either you're going to lose right away for quite a sustained period, or if you happen to start winning right away and you'll think you really know what's going on, you're setting yourself up for a huge loss because you think you know what's going on. Also, trade like a computer with no emotion and understand that it's a lifelong learning game. I've been doing this for 17 years and I still learn new strategies all the time. And also, markets are always changing. So you have to really be able to adapt to new things, because people that can trade well in, say, a bull market like we have now, sometimes really struggle in a bear market. And sometimes bear markets and bull markets can go on for years. And so you need to be able to trade in any market and make money. So have some reasonable expectations and just accept that you can always learn more, and that's life.